Before we begin the app review and the portfolio update, if you guys haven't yet, please support the channel by subscribing to this channel, Minds in Motion. It does help out a small YouTuber like me greatly. And also, if you like the content in this video, make sure you hit the like button and comment below. And also, if you guys want to take advantage of a free stock, use my link in the description below for both Webull and Robinhood. And also, there's some other awesome referral bonuses you can receive by using some links that I also have in the description below. Let's jump right into the video. Of the cash flow challenge, and as I have been updating my portfolio and giving you guys the latest buys and also dividends received, I have also been reviewing the Webull app as I go through this portfolio. So first, let's talk about the loss and gains. The market value of this account is $740.86. I have a cash balance of $10.76 for a total net account value of $751.62. I have a profit of $36.24, which is a 5.7% gain for this portfolio. So let's look at the holdings in this portfolio. So my current positions, I have 7 different stocks that I own in this portfolio. The first company that I own, which is the first stock that I bought in this portfolio, is PBCT, and that's the ticker symbol for People's United Bank. I own 11 shares. My average cost is $16.40. It is currently trading at $15.91 for a loss of $5.43 or 3.01%. Next is WBA, which is a ticker symbol for Walgreens. I currently own 2 shares. My average cost is $51.70. The going cost of Walgreens right now is $55 for a profit of $6.60 or 6.38%. Next is Archer Daniels, ticker symbol ADM. I have 3 stocks or 3 shares of the stock ADM for my average cost of $37.23. It is currently trading at $40.90 for a profit of $11.01 or 9.86% up on this particular position. Next is Franklin Resources, ticker symbol BEN. I have 2 shares at an average cost of $27.34, up $4 for the current price of $29.34 is what it's trading at today, and I am up 7.32%. Next is Leggett & Platt, ticker symbol LEG. I have 4 shares for an average cost of $37.77. It is currently trading at $40.81. I am up $12.16 for a 8.05% up on this particular position. So I did add AbbVie last time I did a portfolio update, ticker symbol ABBV. I only have 1 share. My cost of that share was $66.45 for it's trading currently at $73.40, and I'm up $6.95 for a profit of 10.46%. Now I would like to add to my position in AbbVie. I kind of jumped into this stock late after they had a huge drop, and now they seem to be going back up. However, I may add a couple of more shares of this stock before it goes up. And if you guys have any news on AbbVie, I have not done much research lately since buying this position, but you can leave a comment in the comment section below if you have any news why I should or shouldn't buy AbbVie at its current trading price. And then last but not least, I did add AT&T at a price of $36.88. It is currently trading at $37.83. I am up 95 cents or a profit of 2.58%. And also I do plan to add to my position of AT&T as well. When I bought this position, it was the money that I had left in my account. So when I add my $100 that I add to my account each week, I will probably add to my position of AbbVie and AT&T unless there's something else better on sale or on a dip or at a discount that I feel would be more beneficial to this portfolio. Next, let's look at the dividends that we were paid in the portfolio this week. So as you can see here, since the existence of this portfolio, I've only received 3 dividend checks. One was on August 15th for $1.42 from PBCT, and now I received 2 more dividend payments on September 12th, one for ADM at $1.05, and then the other for Walgreens at 92 cents. So even though I just started this portfolio, I've already received a dividend payment total of about $3 and what is that for? Yeah, $3 and about 40 or 39 cents total in this portfolio. So it's still small, still growing. As I'm adding to my positions, then I expect these dividend payments to start growing and to start rolling in. So one of the things that I found that is awesome about the Webull trading app is they offer a lot of tools in one place that investors can use to review and analyze stocks. They offer articles, and I know that there are a lot of trading apps that do the same, but I find that the articles that they offer on the Webull trading app are very useful, and they come from websites that a lot of investors like to use, such as Seeking Alpha, Yahoo Finance, and also the Motley Fool trading website. So those are just some of the additional features that I enjoy with Webull. Is I can do a lot of my stock reviews and analyze stocks right from this particular app. I don't have to search all over the web or use 3 or 4 different websites in order to get information on stocks that I'm considering buying or stocks. Upon starting this portfolio and using the Webull free trading app, I was only going to invest in Dividend Aristocrat stocks. However, over the last 7 weeks, I've been having great success with those companies, but I wanted to be able to add some other companies to this portfolio as this portfolio began to grow, and I did not want to just be subjected to only Dividend Aristocrat stocks. So what I've now done is I've added a watch list of Dividend Kings. Now, for those of you who don't know, there are currently 29 Dividend Kings, and Altria Group Inc., ticker symbol MO, was just added to the list of Dividend Kings in the month of August. So these companies, one, have survived recessions, major world events, financial uncertainties, and all sort of market conditions, all while growing their dividends for 50 or more years. The difference between a Dividend Aristocrat and a Dividend King is, unlike a Dividend Aristocrat, these stocks do not have to be a part of the S&P 500. Now, before I get into a few particular Dividend Aristocrats that I want to talk about today, the first thing that I want to say is there is no Dividend King ETF. So when a comparison was done, they compared the S&P 500 ETF, ticker symbol SPY, to a basket of Dividend Kings in the month of August. And for the Dividend Kings, they had a return of 1.8% total return, while the ETF SPY had a negative 1.7% total return. So as you can see, these Dividend Kings have outperformed the S&P 500 ETF in the month of August. Now also, for the year to date, the Dividend Kings had a 18.6% total return, while the ETF SPY only had an 18.1% total return. So as you can see, this is why I wanted to add these Dividend Kings into my selection of stocks for this particular portfolio. Now I want to go over a few particular Dividend Kings that I will be watching over the next couple of weeks and maybe adding to this portfolio. So the next thing that I want to talk about in regards to the Dividend Kings is the sector and market overview. So the sector and market overview, it says that the market capitalization character of Dividend Kings are very different from the characteristic of the broader stock market. The following bullet points show the number of Dividend Kings in each sector of the market. So in industrials, there's only 7 Dividend Kings, consumer defense 8, utilities 4, consumer technicals is 2, financial services is 3, basic material 1, real estate 1, and healthcare 1. So Dividend Kings are overweight in the industrial, consumer defense, and utility sector. There are no Dividend Kings in the technology sector, which is the largest component of the S&P 500. So that just explains a little bit of why you don't have to be in the S&P 500 in order to be a Dividend King, because the S&P 500 is made up of mostly technology stocks. However, most Dividend Kings are not technology stocks. The top 3 sectors are industrials, consumer defense, and utilities. And the last thing that I want to go over is a point that they made here about Dividend Kings also have some interesting characteristics in respect to the market capitalization. These trends are illustrated below. 3 mega cap, which is 200 billion, and that's J&J, PG, and KO. 12 large caps, which is 10 billion to 200 billion of market cap. 10 medium cap, which is 2 billion to 10 billion, and then 2 small cap, which is 300 million to 2 billion, which is SJW and FMCJ. They are the 2. So interestingly, 15 out of 27 Dividend Kings have market capitalization below 20 billion. This shows that corporate longevity doesn't have to be accompanied by massive corporate size. So in the description, I will leave a link to this article so that you guys can read it in detail. And also, again, if you guys want to check out the new Webull trading app, you guys can also use my link in the description. You will get a free stock and I will get a free stock, and you would also be helping and supporting the channel by using my link in the description. So to finish this video, I want to talk about the 5 top Dividend Kings that you may want to do more research on. Now this comes from an article in Seeking Alpha based on the dividend yield, the earnings, dividend growth, dividend safety, and valuation. The first stock that they chose was Hormel, ticker symbol HRL. It's a food product stock. It's also a dividend aristocrat, meaning it's also in the S&P 500. They have been growing their dividend for 53 years, and it has a high earnings and dividend growth. It also has a low beta, so that's why it's number 1 in this top 5 list. Number 2 is Parker Hannifin Corp, ticker symbol PH. It's in the machinery sector. It's been growing its dividend for 63 years, which is one of the reasons why it's ranked high on this list of the 5 top stocks. It also is ranked high due to its high earnings and last but not least, its dividend growth rate. Number 3 is Commerce Bank Shares, ticker symbol CBSH, and it has 51 years of dividend growth. It ranks high for its earnings growth and low payout ratio, as well as its low DE ratio and evaluation. Number 4, which is a notable mention, is Target, ticker symbol TGT, which you guys know is also a dividend aristocrat. It's been growing its dividend for 52 years, and the reason why they only list it as a notable mention is because it is a lot less attractive currently due to its 20% increase in stock price, also which is causing the dividend yield to be lower at this point. So unless you already own positions in the company Target and you got in at a lower price, then this may not be a good buy right now because they're considering it to be somewhat overvalued at this price. But hey, it's whatever works best for you. I am not a professional, so make sure that you do your own research or seek professional advice. And then last but not least is the newest dividend king, which is Altria, and the ticker symbol is MO. This is also a sin stock. So some people do not like to buy these type of stocks, but me personally, I don't smoke cigarettes. I've never smoked cigarettes, and whether or not I buy the stock or not, it's not going to change those that choose to smoke cigarettes. So this stock stands out due to its high dividend yield, around 10% dividend growth rate over the past 5 and 10 years. So even though there's a lot of heat against cigarette companies and things of that nature, this particular company seems to know what they're doing in regards to business, and they've been able to increase their dividend payout around 10% for the last 5 and 10 years. Thank you guys for tuning in. Make sure that you tune in weekly and daily for other videos like this, as well as videos on just becoming better financially, how to manage your money, and also how to become the best version of yourself.